Well, welcome back, everyone. Thanks so much for joining us for our question and answer panel. Any questions that you have, feel free to pop them into that Q&A box on your screen. All right, so questions for the panel. A couple things. First off, before we get started, the slides are currently on our website. So if you would like to download the presentations from today, just go to our website under Education tab and then scroll down to Audit Summit and you can download those slides. All right, panel, first question, can depreciation expense be included in expenditures for determination of mill levy and maximum interim fund calculation?
I'll take that. So you can budget, there's both for equipment replacement and for building replacement. You can have a line item, a special revenue fund that you can set up and budget for that. And the amount that you can budget annually is you take the total value of all the equipment to be replaced or the total value of all the buildings or structures that are to be replaced. And then you take the annual depreciation, and that's the maximum amount that you can do a mill levy for each year, so that you can pull up that money in advance in order to have that available to do that replacement when that time comes.
Great, thanks, Dan. Another question, we might need some more clarification on this, but the question is, should be referred to as a custodial fund versus agency fund per GASB 84. Do we maybe need a little bit more clarification?
No.
Okay.
So yes, so that is one of the big changes with GASB 84. They're no longer agency funds and they should be changed to and referred to as custodial funds.
Great, thanks, Lindsay. Will the soil conservation district's additional above the 2.5 mill levy be talked about?
Not in this session, it wasn't. As I mentioned at the beginning, there are a lot of laws out there. I went through and picked out ones and basically filled up my time until I ran out of time, picking different ones to talk about, but that's certainly for soil districts, irrigation districts, all other kinds could certainly come up in a future event.
Should you budget anticipated donations?
I can answer that. Yeah, if you know that you're going to have a donation, maybe it was given to you as a document of some sort, or if you know it's coming, then you can definitely put that in there for your fund that you're going to be putting into. If it's unknown, or if it's just the amount's unknown, you can put an estimate if you need to do that.
Are soil conservation districts a component unit?
I can take that one since Mike's not here, but I think in most cases we've seen soil conservation districts be their own standalone entity. That doesn't mean that they can't be a component unit of a primary government. You really have to go through that component unit evaluation to really see what the oversight responsibility is of, say, the county that that district is in. See who has ultimate responsibility of approving the budget, what kind of control the county has. And so it's going to be a case-by-case basis, and you just kind of have to go through that evaluation to make that determination.
We received a question, is the component unit checklist available on the website? And I don't believe it presently is, but we can certainly get that information to you at the conclusion of the conference. Okay, next question, what changed with GASB 101?
Yeah, so I'd say that the biggest change from GASB 101 from GASB 16 was this concept of vesting. In GASB 16, you really looked at, was the compensated absence or the type of leave vested in making that determination of if a liability needed to be reported. Under 101, that vesting concept kind of went away, and now you really just need to look at that. Is there a more than 50% chance that a leave is going to have to be paid out at some point? And then the other flip side of it, not with the financial statements, but with the actual notes, there were some minor changes there where GASB 101 kind of rolled back some of the note disclosure requirements as far as you no longer have to separately present your increases and decreases in the liability. You now have the option to present a net amount. You just need to disclose that it's a net amount.
Thanks so much. Can you accept a bid based on lead time instead of the lowest price? For example, the lowest bidder has a 15-week lead time, but the middle bidder has equipment in stock now.
Usually lead time would be like a delivery deadline. So if you need delivery by a certain time, that would be part of your specification, and you would reject if they didn't meet it and award based on the low bidder that meets the delivery deadline. If time were of the essence, you are probably operating under some different procurement structure, like if it was an emergency purchase. Ask your legal counsel if it's a special time is of the essence situation, whether you've got legal authority to do something different than a low bidder meeting spec situation.
Thanks very much. Can you touch on the list that came out for the modifications that should or should not be made for clients with modified cash basis accounting? For example, examples of accounts receivable, accounts payable where no cash inflows or outflows have been involved, lease assets that did not derive from an initial cash transaction.
I can talk about that a little bit. You kind of touched on all three of those things though, where the accounts receivable and accounts payable, they're not deriving from cash transactions. Those are things that you're going to get that cash or pay that cash in the future. So with the modified cash basis of accounting, it's basically taking the pure cash basis of accounting and modifying it for transactions based on cash type transactions. So typical modifications are depreciation expense because you purchased the capital asset with cash, and now because you're going to report capital assets, you also are going to report the depreciation expense that comes with it. The other typical modification is going to be long-term debt. You've actually received the proceeds, so you want to put that debt on the books versus a lease. While that is considered a long-term liability, most lease agreements, you're not actually paying any cash up front. It can happen, but for the most part, you're going to be paying cash payments over time. So when you received that leased asset, you didn't have any outflow of cash at that time. So that's why you wouldn't report it under a true modified cash basis of accounting.
Does a soil conservation district need to complete a public hearing in regards to mill levy requests?
I think we can get back to them, Emily, on that question.
Absolutely. Sounds great. We have Cole writing these things down, and we'll be circling back on the questions. The Minnesota State Auditor's Office annually releases a legal compliance supplement that provides both private, public auditors complete and full information during their financial statement audits. Would the NDSAO consider creating a similar guide for jurisdictions in North Dakota to use?
I think we've kind of started doing a little bit with the required budget testing that we communicated out to the local firms. As we start to build more legislative laws that we want tested, we'll continue to build that library and send that out. Right now, we don't have a plan to go through and specifically identify those. It's kind of on as the situation arises, but it has been discussion that we've had to look into in the future. It's kind of similar to that modified cash concept that we put out of these are the minimum requirements that we want to see in modified cash. That is something that we could look into in the future.
We do have a section on our website for private firms, and we are starting to list more and more of this information out there and make it more readily available for the firms. We do communicate it out via email. We do contact them, but that is a place where if somebody was looking as to what information have we released to this point, that is an expectation of the private firms. They could definitely go to our website. And the heading on that, is that under private firms? Do we have that listed, or CPA firms? I think we have.
I believe it says IPA
CPA
review.
firms? CPA firms, yeah.
We need to purchase a new payload loader for the city. Is there a state form we can access that should be sent to potential companies with specs?
There's not a state form, but there are some templates that could be customized for your jurisdiction. Ultimately, the tricky part of that one's going to be writing the specifications that allow for a competitive bidding situation. So if you went to the state procurement online system also, you could do a search. There's a button where you click archives, and then you should find some past solicitations where Department of Transportation in particular issued bids for heavy equipment. And consult your legal counsel.
Thanks very much. If I have inventory that has never been included in my audit report, would this be considered an error correction, and would GASB 100 still need to be followed?
So it kind of depends. If the inventory was always there in the past and you just had never reported it, it would be considered an error correction. And then you would look at, is it material or not? If it wasn't material, you could adjust for it in the new period. If it is material, though, you would want to follow GASB 100 and consider that an error correction.
If inventory is found in my audit, do I need to include it?
Again, I'd say that depends on the materiality, and you can discuss that as far with your auditor, determine if you need to include it or not. If you're the financial preparer, like say you're the county and you prepare your own financial statements, you can make that determination. You can always include it. There's never a reason why you can include it. It's just it might be a little bit of an administrative burden at times if you really only have very small amounts of inventory. But when that starts creeping up, the main thing we've seen with counties recently is gravel, and gravel costs can be very high, and you can have a bit large stockpile of gravel at the end of the year, and that would need to be included in your financial statements if it's material.
Do I need to gather information and have support from all departments in my city for the budget?
I think it'd be a good idea to gather, when you do gather information for your budget, if someone has any questions, it might be management or the board of directors, they might want to see that information. So I think you should gather and keep it.
My board does not currently receive monthly budgets to actual reports. Should I give it to them, to the board, even if they haven't asked for them?
I think it'd be a good idea to bring it up to the board to see if they would like that information. I think it would be up to them what they want to see during the meetings. But I think in most cases that we have seen is they do like to see that information on a monthly basis. So I think it's a management decision that I think they could work with their boards with.
What are some options for counties or cities in getting together to bid equipment at one time to save time and money?
That, if you'd be establishing a joint powers agreement, I would consult your legal counsel about joint powers for the purposes of purchasing. And then you could also engage OMB to see whether or not that would be something that would be suitable for establishing as a state term contract. So feel free to reach out afterwards.
Do benefit payments need to be included in the calculation of a compensated absence?
So it's going to depend on what kind of benefit payment it is. If it's a payment to a defined benefit payment plan or OPEB for pension or OPEB, that is specifically excluded from GASB 101. If it's a different type of benefit payment and it's directly related to the amount of the unused leave liability and the government has to make the payment, then yes, that could be included as part of your compensated absence liability.
What should I do if I find that my cash reserve amount is above 75% for this upcoming budget for fund?
A couple of things you can do is you can look at your appropriations that you are considering having put in the budget. You can also, if there's any projects that were maybe supposed to be transferred, you can look at your balances to see if it should it be in there, should it not be in there. You can look at the revenues as well, so you can kind of play with that. Or if it looks like you really do have a fund that is very high, you can consider not levying as much as you did before.
What is a type of leave that would not qualify as a compensated absence under the new standard?
One main type is going to be your unlimited leave. That's not going to qualify. Another type is if you have a type of sabbatical leave that you're still having to do something for the government, you're just doing it in a different capacity, that also won't qualify.
What happens when I estimated an expense in the current budget year, but I know it will be now spent in the next budget year instead?
I see, Emily, can you repeat that one more time?
Yes. What happens when I estimated an expense in the current budget year, but I know it will now be spent in the budget next year instead?
Okay, so sometimes that can happen where maybe something didn't work out with a vendor and you are going to purchase it again. You would put that amount of cash left over in your cash amount for the end of the year fund balance that you expect to have. And then the next year, you would put that expenditure in again. And that way you're not double counting something, you're moving it to the next year.
Can I implement GASB 100 or 101 early?
Absolutely. Go right ahead. If you're a school district right now with a 6:30 year end and you want to implement the GASB 101 standard for compensated absences, you can certainly do that. By the time year end rolls around here, for those of you that are calendar year clients, you're going to be able to implement both GASB 100 and 101.
I'm a component unit of a primary government. Am I required to be audited at the same time?
Typically, if you're the primary government, say you're a county and you have a water resource district that is a component unit, as the county, if you're getting an audit of the reporting entity, the water district financial statements are going to need to roll up into your financial statements as a discretely presented component unit. The water district could have already been audited by another firm. And so it's not necessarily they have to be audited at the exact same time, but those numbers will need to have been audited in order for the financial report of the county to be complete and to have that final audit report.
And the primary government does have some decision-making if they want to have that water resource district or component unit being included as part of their audit. This will be an important thing if there's federal spending on both sides, because then if you're trying to pull in that component unit's activity within your CFA, that could impact your thresholds and your single audit that you would need. So as the primary, you could work and make the decision to have them included rather than having them separate. But if they are a true component unit, their information should be part of your statements, whether they're audited separately or as part of your audit.
One more thing to add to that too. So if you have it where their audit is done at a different time by a firm, make sure if you're the auditor doing it, you'll see their opinion will be a little bit different if they're going to rely on that information or not. That'll be stated in the opinion of the primary government.
Thanks very much. Am I required to create a capital project fund in some cases?
Yes, there might be a case where your bond that you're doing for that project, in the bond covenants, it could state in there that it's going to have its own principal and interest fund for it, and also for the construction of the item or project that you are doing for the bond.
Were there any major changes to the note disclosures for the new compensated absence standard?
As I talked about a little bit with one of the earlier questions, the main change that occurred is that you now have the option to report the increases and decreases separately in that note disclosure for the compensated absence liability, or you can net them together. You just have to disclose that it's a net amount. The other change that I didn't touch on was that the in the past, you had to report what the liquidating fund was of the compensated absence liability. So if your general fund typically was who paid the employees and paid that liability, that fund had to be disclosed in the notes. That is no longer a requirement with GASB 101.
With the new cooperative purchasing legislation, am I able to use the Sourcewell contract that I have heard about for buying motor graders and other equipment listed in the contract?
Under the new legislation, you'll need to read that law and follow the steps. As I mentioned in my presentation, there are more than one cooperative purchasing out there, so I would recommend that you compare the offerings under the various cooperatives and see which offers the best price, equipment, and terms and conditions. And then just follow that law, because there's an approval requirement and there's a joint powers requirement, so contact your legal counsel.
What pay rate should I use in calculating the compensated absence liability for my entity?
Typically, you'd use the pay rate that is as of your financial reporting date. It can change if, for example, you know that it's going to be paid at a different rate. So, for example, in the presentation today, I talked about maybe when someone retires, their sick leave gets paid out, but it gets paid out at 20% of whatever their pay rate is. Well, when you're calculating the liability in the financial statements for the year that you're preparing them for, you're going to then use 20% of the pay rate instead of using the full amount.
I'll add to that, Emily. If you're a local government that has a large number of employees, the standard doesn't explicitly state that you need to do a pay rate by person. So there is some flexibility for you to create some sort of average or some sort of reasonable rate to use, instead of, let's say you have 500 employees and going by line and adding each individual person's personal pay rate for that calculation. So since it is an estimate, you do have some flexibility in the decision making. You just want to make sure that you have a reasonable basis and it's clear and consistent what you're using.
Great, thank you. If leave is unused at the end of the year but will never get paid out upon retirement, does a liability need to be accrued?
Short answer is yes, but it's going to be based on the amount of the leave that is more likely than not to be used during the course of the employee's period.
And that's the big change. In the past, you used to be able to use, let's say you only get 20% of your sick leave upon retirement. That's the percentage that you could apply to that end of year balance. But now you need to consider the fact that from the end of the year until retirement, people are always going to be using sick leave. So you need to have a more reasonable application, some sort of percentage to include that in your compensated absences calculation.
Excellent. Well, panel, thank you so much for all of your responses. That does conclude the questions that we have received from our viewers. Just as a reminder to everyone tuning in today, any questions that you have that come up after the conference, always feel free to reach out to our office. We are here as a resource and we're always happy to help. But with that, this concludes our Audit Summit conference. Thank you so much for joining us, and we hope to get to see you in person sometime soon. Have a great rest of your day.